What is the current state of the housing market? Have you ever wondered how the housing market today compares to the wild days of the 2000s? Let's take a closer look at what is happening now and how it relates to the past. The housing market in 2025 is showing signs of cooling down compared to the rapid growth we saw in the early 2020s. Home prices are expected to either flatten or decline slightly this year. In fact, over 60% of market participants think prices will drop. This is quite different from the strong price growth we experienced in the early 2000s and during the pandemic, when low mortgage rates and high demand pushed prices up sharply. Understanding the supply and demand dynamics is key. Right now, housing inventory is increasing, which means there are more homes for sale than in recent years. However, the inventory is still below historical averages. New home listings have reached levels we have not seen since before the 2008 financial crisis. Existing home inventories have risen about 20% year-over-year but remains near record lows. This limited supply continues to support prices to some extent, even as buyer demand is not as strong. Mortgage rates have risen significantly since the pandemic lows. They have moved from under 3% to around 6.5% or higher. This increase has made borrowing more expensive, which has dampened buyer enthusiasm. Although rates have slightly decreased in early 2025, they are still high compared to the 2000s boom period. This situation limits affordability for many, especially first-time buyers. As a result, some potential buyers are choosing to delay purchasing and continue renting. Unlike the early 2000s housing boom, the current market operates with stricter lending standards and more traditional mortgage products. This change reduces the risk of a repeat of the foreclosure crisis that followed the 2007 to 2008 financial crash. The market fundamentals today are stronger, with less speculative lending and more regulatory oversight. From a nostalgic perspective, the current market contrasts sharply with the pre-2008 era. Back then, rapid price increases, easy credit, and a flood of subprime loans led to a bubble that eventually burst, causing widespread foreclosures and economic turmoil. Today's market, while still challenging, is more stable and less prone to such a collapse due to lessons learned and regulatory changes. In practical terms, buyers in 2025 should expect a slower market with more inventory choices but higher borrowing costs. Sellers may face more competition and less price appreciation than in recent years. For those remembering the 2000s housing crisis, the current environment offers a more measured and controlled market, though affordability remains a significant concern. In summary, the housing market in 2025 is characterized by flattening or slightly falling home prices after years of rapid growth, increasing but still limited inventory compared to historical norms, and higher mortgage rates compared to the early 2000s. Stronger lending standards are preventing risky borrowing seen in the past. The current market reflects a housing environment that has learned from the past but continues to face pressures from economic conditions and demographic demand.